Welcome back, traders. I'm Cristina Barthanidou, market analyst. It's Thursday, February 13th. We are just a day ahead of Valentine's Day, so plenty of love is in the air, but also some big headlines, especially on the economic and geopolitical front. First of all, US CPI data arrived stronger than expected at 3% year-on-year on Wednesday, suggesting that the fight against inflation is not over yet. But despite that, analysts remain optimistic that a single rate cut, a 25 basis point rate cut, could take place in the US in 2025. Then we got some encouraging headlines that peace talks to end the war in Ukraine might be possible in the short term after a potential phone call between the US and Russian presidents. And plus we have the 61st Security Conference taking place in Munich in the next 2 days. Higher global representatives may attend the event, so we may get more headlines on the geopolitical front. But let's now have a look at what the technical signal suggests. So in this video, I will break down 3 key markets: gold, euro dollar, and dollar Swiss franc. And having first a look at gold, we can see that the precious metal managed to escape a drop below 2,895 once again. That makes me think that a new bull run could take place despite the overbought signals coming from the RSI and the stochastic oscillator. So there might be another bullish action, and if we successfully overcome the 161.8% Fibonacci retracement of this downfall over here at 2,945, then we may see a critical battle taking place near this key resistance line at 2,975. And even closer to the 3,000 psychological mark. So we may see a critical battle here before the next negative correction. And in case a pullback comes earlier, and particularly if the 2,895 level gives way, then the price may seek support somewhere between 2,840 and 2,855, where the lower band of this bullish channel is located. Lower than that, I would keep a close eye on the 20-day moving average near 2,800, and perhaps a break below the 2,790 level, where the price almost peaked back in October, could worsen the outlook, likely causing a sharper decline towards the 2,720 constraining region. In this case, that could also put the Elliott wave pattern into question. It seems that the price is that the first bullish wave of the 1 to 5 bullish pattern is still in development. So it will be interesting to see whether we will get a short pullback before gold continues higher. And now looking at euro dollar, euro dollar seems to be within a soft bearish channel, and perhaps this could also be considered as an bullish inverse head and shoulders pattern, which still needs confirmation above the 1.0460 and 1.05 region. So I'm currently in a wait and see mode. If we successfully overcome this territory over here and the 1.05 level, then that could take us quickly up to the 1.0572 number, where the 38.2% Fibonacci retracement level of this downtrend is placed. Then higher than that, we may see another acceleration towards the 1.0675 and 1.07 number, where the 50% Fibonacci mark is located, and higher than that, the 200-day moving average at 1.0750 at the moment could be another challenge for the market. If we look at the technical indicators, we do have some encouraging signs. The RSI is trying to rise above 50. The stochastic oscillator has also turned up, and there is a gradual rise in the MACD oscillator as well. So that gives us hopes that upside pressures could persist. Nevertheless, if the price pulls below the 1.04 number, and if the 23.6% Fibonacci mark at 1.0420 proves hard to overcome, then we may see a decline towards the 1.0230 and 1.0260 region, unless the 1.0340 comes to the rescue. that region over here could be important. Break below that could initially find support somewhere between 1.0148 and 1.0175, where the price bottomed out near 2-year low back in January. So failure to hold here could dampen market sentiment and could generate stronger selling pressures towards the 1.0034 region, where this support line is placed, and perhaps in this case we could also see the case of parity materializing. And finally, turning to dollar Swiss franc, this is also an interesting case because the price failed to reach the 0.92 number. This was a key sailing to upside movements back in 2023 and 2024. So failure to reach that territory and today's decline makes me think that a bearish breakdown is likely, particularly if we close below the 0.9073 number and beneath the lower band of this bullish channel. That could motivate first selling. And then in this case, support could come immediately somewhere between 0.90 and 0.9025, where the 50-day exponential moving average is located, as well as the 23.6% Fibonacci retracement mark of this up leg. Therefore, a break below this territory could send stronger bearish signals and could confirm a bearish trend reversal, likely pressing the price towards the next Fibonacci level at 0.8883. The 0.89 number could also protect the market, even out, and there's another extension below the 200-day exponential moving average as well. Then that could cause a stronger decline towards the 0.8755 and 0.8755 territory, where the 50% Fibonacci retracement level is placed. Now, looking at the technical indicators, it seems that downside risks are more likely than upside. The downside movements are more likely than upside ones. We can see that the RSI has returned to its 50 neutral mark. The stochastic oscillator is also pointing downwards, and there is some weakness in the MACD as well. So the risk is skewed to the downside, but if the price manages to rebound near the 0.9073 number, then we could see an acceleration back to 0.92. And then it's important to know that the 50% Fibonacci retracement of this longer-term downtrend from 2022 to 2023 is within the same territory. So that could be a critical region to watch. If we successfully overcome that bar, then the rally could stretch towards the upper band of this bullish channel, currently seen at 0.9370, and then above that, the 61.8% Fibonacci mark of the longer term down leg at 0.9450 could be another key spot to look at if indeed we have a strong acceleration and a resumption of this upward pattern. So that's everything I wanted to share with you guys. Thank you for watching. If you liked my video, please subscribe to this channel. I will be back next week for more fundamental and technical analysis news. Thank you for watching and have a great trading day. Bye bye for now.